Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He's speaking to us from South Florida. Welcome back to the show, Rick.
Morning, Jim. Always a pleasure to join you and connect to your audience.
Last week, the markets seemed pretty choppy. Have they topped out?
Well, that's what I've been saying. I've been kind of drum rolling a few key targets now for more than a month that were recently reached within pennies, really. There was one at 3938.25 in the E-mini S&Ps. There was a corresponding target at 318 point, I think it was 30 in the Qs, QQQ. And the diamonds, I had a target up at 318.30. So we got within a millimeter on each of those. And the only target that was not fulfilled, and why I've been sort of wary of signaling the all clear for bears who want to get short, is that, IWM, which tracks the small cap stocks, has been the rage for the last few months. It's been the portfolio managers have been throwing other people's money at with reckless abandon. So I did want to get up to 234. Didn't quite get there. It was a few points shy of that. So I would say the jury, at least for me, is still out as to whether we've had that major top, and I'm allowing for that possibility.
What's happening with the U.S. dollar, and does it tell us anything?
Well, it's up a big 0.00 cents today. It's not exactly a violent reversal, but I've been predicting for some time that the dollar was going to resume. The strength really began early in January. We had a pretty good move up, and we've been coming. We had about a month-long rally there. It's been coming down ever since, but not too much. On the dollar index, we've come down from a high of around 91.50 to today. It hit down at 90, and I'm pretty convinced that the dollar is going to have to strengthen because the whole world is betting on the opposite. The Federal Reserve and virtually anybody who's borrowed dollars is desperately dependent on a cheapening dollar. And we've had all this stimulus, which is ostensibly inflationary, but the point I've made in our past interviews is that 5 or 10 or 15 or 20 trillion dollars worth of fiscal and monetary stimulus is not even a drop in the bucket compared to what I would call the unactualized deflation represented by the derivatives market, $2 quadrillion, all of it essentially reflecting a condition of there's always a dollar borrowed to add to the notional value of that market. So I think that really, because we're so dependent on the dollar staying weak, the last thing anybody wants, most particularly the central banks, is a strong dollar. That's why I think we're absolutely going to get it. It would correspond to a major bottom in the bonds, and I can only say that the bonds have overshot, that the March T-bond futures have overshot to the downside, a 162.19 target. They appear to be trying to turn around there, but I would say the small overshoot so far suggests that the bond bear market may have a bit further to go.
Is deflation looking like it's going to happen, or inflation?
Well, I've been pretty steadfast on deflation for 40 years. My knowledge of it goes back to a book by C.V. Myers called The Coming Deflation. And yes, he was a bit ahead of his time with the 1976 copyright, but nothing. It's helped me predictively over the years. You know, every time we had huge money stimulus, such as coming out of the 91, 92 recession and looking at the S&L crisis and all that, I was able to foresee that we would have no inflation as a result of monetary stimulus other than asset inflation. And that's still the case. You know, the only inflation the Federal Reserve seems capable of producing anymore is asset inflation. But as the working man can probably sense, it hasn't produced, stimulus hasn't really produced much economic benefit. So that's all we're getting is asset inflation. And Lord knows how much stimulus it takes to create an actual dollar's worth of inflation-adjusted growth.
When you said nobody knows, what's the experiment going on here?
Well, the Fed's kind of making it up as it goes along and praying that everything works, but we shouldn't kid ourselves that they know what they're doing or that it's going to end well. You know, in the idealized notion is that we're somehow the stimulus is going to be so successful that we'll have the economic strength to pay back all our debts. But anybody who believes that is mentally retarded. You know, we're never going to get anywhere near the kind of growth that would allow us to service that debt. And unserviced, it represents a fatal drag on any economic stimulus that's attempted. We can't really stimulate the economy out of the hole at all, and all we're getting is bigger and bigger asset inflation.
What needs to be done to make sure the U.S. economy, which drives the world's economy basically, what does it take to get the U.S. economy back on its feet, or is it possible?
There's not even any doubt about that. It's going to take a second Great Depression because there's no honest business being done out there. You know, we've got a global economy that amounts to about $200 trillion in goods and services, but the financial economy is 10 times that size. So what that's telling you is that people don't make their money getting their hands dirty, creating actual things. They simply shuffle paper. So the skew there in the direction of paper shuffling is so extreme that the only way we're going to get back to honest markets and markets where credit is not an infinite supply is to wipe it all off the books, and deflation is the way that gets done.
What kind of a picture does that present to the average family?
Well, I think the best the average family can do is stay out of debt. You know, if you can pay down your mortgage, that'll be a good thing. If you're not in hock for 7 years on a car lease or something like that, or driving a lot more car than you can afford, I think affordability is a key component. I hesitate to talk about self-reliance such as existed in the 1930s. You know, you had a population then that was about the third of the workforce was involved in agriculture, and you might say that at the time we were living closer to the land. But we've gotten away from that. There's such an intricate specialization of the jobs market that a lot of the time we don't even know what our neighbors do, even if they tell us what their job description is. But I think we're really going to have to come back to basics in our own lives. And but there's just no question in my mind really that there's got to be a great reckoning against the unpayable aggregates of debt that have built up over the years.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. Rick, the supporters of Bitcoin say it's better than gold and silver. This is where you should be sinking your assets. What's going on with Bitcoin and the other cryptocurrencies?
Yeah, sure. Better than gold or silver. That illusion is going to die at some point. Actually, it goes beyond illusion. It's pure delusion. And, when you think about it, the initial creation of Bitcoin came, the only thing I can see that drives it is scarcity. And of course, scarcity is it's not exactly the bullet point criteria for money. It's not a good store of value. It doesn't, how can something that fluctuates by, today, Bitcoin is off nearly 7%. How can you base a currency on something that has violent swings like Bitcoin? So, but as we know, nobody's really buying or accumulating Bitcoin, so they can buy coffee at Starbucks or a Cadillac Escalade. That everybody's in Bitcoin now for purely speculative purposes. So, and I'm just not, I'm a technical forecaster, so it hasn't been hard for me to see Bitcoin going higher. And in fact, I had two targets, one at 60,000, which suspiciously the last rally missed, and above that, I had a $66,000 target for Bitcoin, which I had put out there as a possible top. Even though I'm not going to say it's impossible that it could go to insane prices like $200,000 or even $1 million. But if I'm just looking at my charts and trying to make a more rational case, I could see a top at 66,000. So Bitcoin's getting sold down hard today, but I think it's got certainly one more rally in it, and I'm not going to presume to predict that that'll be it.
Well, my Bitcoin alert service said somebody cashed out $6 billion in Bitcoin yesterday.
Yeah, and I wonder if that's even a big number. I can't remember what the aggregate value of Bitcoin is. I guess 6 billion is big. I never believe rumors that some big whale got out of this or into that, especially in the options markets. I've been an options trader for over 40 years, a dozen of them on the trading floor as a dealer. And I can only say that the bigger the trade, at least in the options markets, the less significant it is. Typically when someone's in there buying tons of options, it just means it's a hedge position. And, although, I hesitate to come up with anything that Bitcoin is going to be a hedge against, let's just say that the $6 billion sale was someone a knowledgeable, well-heeled player who said, this is it, I'm going to take some profits. So more power to him.
We'll have more with Rick Ackerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Ackerman, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, how does gold and silver play into a possible deflationary scenario?
I'm not a gold at 50,000, let alone 50. I don't see gold going to 5,000 an ounce or anything like that. But I do see gold as absolutely dependable as far as holding its purchasing power relative to any other asset you could conceive of right now. So what I'm saying is that in the end, if you've got gold here, no matter what its price in dollars, you're going to do just fine. It's just it's the same safe haven that it always was, but gold's ability to discount inflation fears has been very seriously impaired by the speculative fervor that has transferred into Bitcoin. But I still like gold very much, but I'm not expecting some sort of great rally. At worst, though, gold is biding its time in a bull market, and you can see that even on days when the bears beat it down pretty hard so they can cover short paper positions, they can only go so far with it. But the other side of it is that the rallies don't go very far either. So again, I see gold as in a holding position within a larger bull market.
What's going on with energy?
Well, we're energy dependent, unfortunately, not in the sense of the demand for energy, but in that a lot of the $2 quadrillion derivatives hawkage has been done against energy resources. So just as the strong dollar is going to be a big shock to the global economy and to all the central banks, the collapse of oil prices is going to be an equally difficult shock to withstand. So much borrowing has been done against natural gas and crude oil resources in the ground. So I think it's coming only because we can't afford for it to come.
So that means higher oil prices?
No, I think oil is, you can only go so far with the price rise in crude when there's no real demand for it. The curtailment of supply, supposedly tight supplies because of the cold wave and all that, well, that's all reduction of supply. True bull markets in energy are driven by periods when global demand for energy resources was higher. But that's not the case. As I said earlier, nobody gets their hands dirty running actual machines that make things. We're on the downside of energy demand and a curtailment of supply, tight supplies can only keep prices buoyant for so long.
If oil prices don't go up, does that mean we're driving a whole lot less as well?
I'm not even sure how, what the driving factor looks like. It's, I guess there's just a lot less oil-dependent economic activity in hard times. And we're, I think, in hard times now, other than but for the fact that we've got this huge asset inflation, bull market in stocks that tends to distract us from the real dragon.
What's going on with agricultural commodities?
Well, they've just discounted. It's just been a play against inflation. I understand that, there's a global shortage of certain agricultural commodities, and I'm not sure how much of that, how that's been used to talk up the price. But anyway, a lot of it has been this idea that if you need to own something real, so there's been a scramble into some of the grains in the same way that there's been a speculative move into crude oil.
Should a person go purely defensive right now?
Well, as I said earlier, a person should defend by just not being deeply in hawk. Living within your means is going to be, I think, primary over the next 5 or 10 years. And the idea, don't buy into any hype about how, some guru's going to make you rich in the coming crash. We're looking at a major deleveraging event. Anybody who's gotten really rich in this world, I'm talking about 9-figure private jet rich, they've done it essentially with leveraging strategies. And as I keep saying, we're going to deleverage in this deflation that's coming. So in that instance, I think a lot of the geniuses will be challenged to hold on to a modest fraction of their current net worth. So just don't look to get rich. My son has a very successful business. He flips collectible cars, and I keep telling him he only knows bull markets, and I keep telling him, Dan, when the market turns, these cars that you're selling easily for whatever price, the market's going to completely dry up. You're going to have no bids. And I also tell him that, if he wants to be really rich, to keep some powder dry, that stuff that he's paying top dollar for right now, he'll be able to buy for 10 cents on the dollar if he waits for a good bottom. So, he's young enough, I think, that strategy will eventually pay off for him. But, those of us in our 70s, looking more at retirement, I think, you need to push it all into safety. And by safety here, I would mention something, that, a very successful financial advisor friend of mine is telling his own clients. He uses something called a barbell in financial terms, meaning assets that don't correlate. If you get hurt in one, you're not likely to get hurt in the other. And his current barbell is gold versus bonds. And over 40 years, he's made his client nothing but tons of money in a portfolio that was very heavily weighted toward treasuries, T-bonds, strips, and munis. But he's not in it any longer so much for the capital gains, which were, in the order of 15 to 25% per year for a lot of the really good years. He's just there for safety. Again, one asset balancing another, gold versus bonds. It's very, very difficult to imagine a condition which would cause both of those things to be losing investments.
Rick, thank you so much for chatting with us.
Well, it's always a pleasure, Jim. I appreciate your inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.